And some of the moves that you're making are representative of the tension that I'm referring to. We know what the equal weight and we know what the Russell are doing, but we also know what Oracle's doing. And we said going in, and some on the street said that this was an exceptionally consequential earnings report, given the name, given the questions, given the timing, given everything else. You sold it at the open.
Yep.
Tell me more.
Well, I told you the last time I was on that I would take a wait-and-see approach. I wanted to see what earnings had to offer. There were two questions that I had gone into the earnings call hoping to get answers to, and neither one of them was answered. One was the very first question that an analyst asked was basically, where's the ceiling? How much of a lid are you going to put on this spending? And Oracle's management team came back and basically said, we can't answer that question for you, but we can tell you that it's not $100 billion.
I like your Freudian slip there, because that's what it was.
Well,
right? You talk about Oracle and you say, well, OpenAI, right? You make the mistake of doing that. That in and of itself tells part of this story. This so intertwined, reliant, whatever words you want to use, is Oracle on OpenAI. Their revenue missed, their capex is huge, their backlog is soaring as well. But you finish your thought. I just thought that was an interesting slip.
Well,
of the tongue.
I think, Scott, I'm old enough to remember when proximity to Sam Altman was the best possible thing for your company and its share price. Now we're seeing it go the other direction. Right. Like now we're seeing it go the complete opposite direction.
But don't you think, like, you either believe in this RPO being $500 billion and most of it coming from Meta and OpenAI, or you don't?
Well, that's the other.
That's the buy or sell decision on the stock is you believe that much spending is going to happen and Oracle is going to be collecting revenue on that, or you don't?
That's the other question that I was looking for an answer to coming from this earnings call that I didn't get. It was, what are you going to do if OpenAI comes back to you and says, hey, listen, winter is coming. It's code red over here. That $300 billion we committed to, it's more like 200. It's more like 150. It's more like 100. What does that mean for you as Oracle? How much of these commitments can you back away from? How much of the spending that you've told us about can you cancel? And we got a little bit into the weeds around, like, some of these are leases. We don't own the land. Well, maybe I would have rather you own the land, because at least there's some tangible book value I can talk about.
I mean, there is a stock story. There's a CDS story, 9% gain, 5-year Oracle CDS, the highest level since 2009. Both of those charts tell competing sort of stories. Jim, you're in the name too. We're looking at the worst day since March of 2001. Malcolm's out. What about you?
I'm sticking with it, Scott. And I'm not adding to it here, but I will say that new money that comes into client accounts, I am building a position in new money in Oracle. I'm basically not giving up on it. I would have liked, in an ideal world, to have seen a quarter where they did better on free cash flow, maybe showed a little bit more sobriety on capex. But ultimately, what these guys are saying is we're in this for the long haul, and they do believe OpenAI is good for the money. It's not so much right now a question of whether it's 550 billion on the RPO. For me, it's a question of where the stock price is right now, and on current fiscal year earnings, it's a 27 times multiple that for me is tempting enough to stay with it and take the chance that this all works out, this all being the OpenAI aspect of this. I don't think that this is a speculative name from the point of view of, oh my goodness, it could go down 50% from here. I mean, remember, there is a software business. Remember, the Oracle Cloud infrastructure grew over 50% year over year. So it's not like it's a crummy business. It's a question of what is the right price for the shares. And at 192, I think that's fine to build a new position, but I'm not getting bigger in it than I already am.
Okay, so the target, what's the right price for the shares? Let's run with that, as you own the stock too, okay? 1, 2, 3, 4, 5, 6, 7 price target cuts in front of me today. 230, 230 looks the lowest at JP Morgan. The highest remains 370, brought down from 375 at Citi. Ives, Dan Ives of Wedbush, when he comes out this morning, he's like pounding the table on it, based on the backlog and some of the other stuff. Bill Baruch, what do you think?
We have a lot of support down at 180. We own the name. I'll answer your question first. 260 is a great place to look to see this through the time of next year, but it's going to have to go through, these growing pains. 180 is again, a lot of support. They're executing right now. They're in the execution phase, and they're executing faster than anybody else. Reminds me of that TV show Silicon Valley, pre-revenue. You don't want to go and just start claiming revenue. This execution phase in AI could be something similar to that, where you now have to see this continue to play out. And the liabilities are picking up, their capex increased, but you also have to see the revenues that are going to be coming in, and the end user needs to start increasing that revenue, and that's where the question mark will lie.
What do you guys think? What do you guys think stops this? Because this didn't start today. This stock is in a massive drawdown. What could put an end to the desire to people trading in the credit default swap market as though this is like some sort of calamity?
And by the way,
and how do we get a bottom in the stock?
And by the way, that's a great question. Before you answer it, it's not like, David Faber asking Sam Altman this morning in an exclusive interview on this network, $1 trillion plus worth of commitments, and he says essentially we're good for the money. The stock, it's not like Oracle turned around. It's not like Oracle came off the lows of the morning. So to Josh's question, what is it? You said Sam Altman. In what respects?
Well, one of the cracks that started to form back in October was questions around whether or not they would go public. And that was one of the things that I think investors were hanging their hats on as a 2026, not necessarily guarantee, but we had a reason to believe that company would be coming public, potentially at $1 trillion valuation for the first time ever. And that was the thing that investors were getting excited about. And so any way that I could have a proxy investment into OpenAI, that's what I wanted to own as an investor. That's what's done a lot of the heavy lifting since the April 2nd lows. And so I think that it's important that we consider every single thing that comes out of that company going forward, where we're hearing about the code red, for example. That doesn't say to me we're good for our $1.4 trillion worth of space.
What's more concerning to you, that chart or the CDS chart? The drop or the gain?
I think the liabilities are a concern, and the drop in the CDS is definitely a concern. Using Malcolm's OpenAI proxy, this was a blow-off top, if you will, when this was above 300. We trimmed it above there. It felt like it got out above its shoes. The problem is now it's just a precipitous fall. When did that rally start? It started the June report when we broke out above that 180. And that's why I think that support and 180, you're going to start to find buyers. So the whole story makes a round trip. That's what I think is going to bring some support.
If OpenAI were to file an S1 on Monday, I'm not saying I think that's going to happen, but hypothetically, if this thing requires for there to be some stability to the OpenAI bull case in order for this company to find its bottom in the stock market, first of all, the last funding round was $500 billion, I think, I think SoftBank. All right. Do we still think that this is a $500 billion IPO if and when it happens? I think that's one big.
It's got to be more than that, right? That counts as a down round.
So to your point, the proximity to Sam Altman went from being positive momentum to now being, I don't want to say negative momentum, but definitely making people feel shakier. So maybe that's the thing that needs to happen. Some guidelines about their biggest customer coming public.
And we haven't even talked about a revenue miss. An earnings beat because we sold shares of a company that we owned inside. I'm blanking on the name, but we sold to SoftBank.
Ampere.
That's what helped on the earnings side. But that means next quarter, maybe we're not talking about.
Well, that's what I was thinking about, the growth in the end user. That's where those revenues are really going to be driven from, and the continued build out is.
Well, here's the problem. Here's the problem. You have Meta leaking to the tech press that they'd be more than happy to work with TPUs.
Yeah.
Oracle's made this huge bet on NVIDIA GPUs. Is that not looked upon now as the most efficient way
and then
to build these data
attempt
centers?
to assuage those concerns on the call by saying, well, you can bring your own chips to the party. Maybe we build that way and we allow. Well, that's where the margins are. NVIDIA's GPUs are what everybody wants access to, which is why you can charge larger, wider margins, and that's helpful to that revenue story.